Good. Okay,
How's it
nice.
going? Right on. I think we got everyone, guys. So yeah, you can
Okay,
start down.
okay. So I guess we could. So we can begin. So let's start from me. My name is Dominic. I'm CTO of Dayvidende Finance. I'm also a fund manager as well as architect of the whole Dayvidende ecosystem. So I think we can begin from myself as a private investor or employee in certain projects. I've noticed some specific things that can predict if a project is going to be successful or not long term. Usually it's based on the true revenue or a utility that the token is provided. Also, when it comes to being an employee of a startup, um, it's a good thing to be able to see things that these projects want to hide from their potential token holders, which is a good thing because it's way easier for me to research coins, and based on my also specialized knowledge in DeFi sector, and especially V3 liquidities, which is quite a new narrative in crypto that lasts only 2 years now, so it's still brand new. We decided to create a Dayvidende Finance as a kind of tokenized investment fund, which is quite easy to explain at the beginning. So basically, you get our DV token. For the money from the ICO, we create a treasury that is also managed by a set of our experts in Dayvidende. And out of the revenue made of this treasury, this money is then given to our holders in many ways that we are going to describe further. Okay, so basically, dividend bases on four main pillars. The first one is diversification. To explain it, it's quite easy. So if you are a small investor that has 100 tokens, 1,000 tokens, I mean USD, it's not that easy to be diversified enough, especially if we're talking about DeFi sector and investing like we do, because still you can't have that much exposure, especially in the free liquidities on certain blockchains. It's quite tough to make a revenue if a common gas fee is around $2 or $3. So for certain people, this kind of investing is easy saying not a good idea doing it by yourself. So the next pillar is the passive income, which simply saying from the money we make through the free liquidities investing, which is basically giving people ability to change coins from one to another and make fee out of it from this passive income stuff. Part of this revenue is given to our holders in the form of BNB token. Part of this is reinvested, um, and part of this is just burnt from our tokens. Another pillar, time efficiency, is what I mean is that if you, as an individual investor, want to supervise your positions or your liquidities, um, usually when you have little money, it time because usually you need to spend time or for example your family or work or business that you run. From our side, we have a set of people that are uh, experts in this niche, so we are able to supervise these positions more often than you do, and also we are able to notice things that you may not notice at the beginning that will affect your positions in the long term. And the last pillar, which is cost efficiency. Cost efficiency is an advantage on our side due to a scale effect. If, for example, we have an individual investor that has small money, this person usually spends much money on gas fees in certain blockchains like Ethereum mainnet or BNB, which is also a common thing because these transactions, especially in V3 liquidities, are quite complex. That's why they cost so much. But on our side, if you have 100 of investors like this, 1,000 investors like this, and we make swaps in $1,000, these costs, if they are divided, but the amount of people that have our token are just unnoticeable. Invest like a whale. I think most of you know how whales are really good positioned people or wallets in a crypto sphere because of certain things that we are able to break, that we want to break down in this slide. So first of all, staking every project on Dayvidende brand. Out of our treasury, we also want to invest into creating technology instead of only investing into them. So imagine that as a dividend, we can create a lending protocol or some other business of which revenue is going to also go to the dividends treasury. So basically, in this solution, holders of our token are also going to become first clients of these solutions because usually if you invest in something, you also want to support this. So we just use services that this particular company gives you. So another advantage of investing in a whale, so due to the scale effect, is a private seed round access. To explain this, you can imagine that when it comes to, for example, Sand token from Sandbox project, um, first people, usually big institutions, were able to buy the tokens around 2016, 2017 for a price of really, really small, even compared to the ICO that happened a couple of years later. So these whales, at the moment of unlock of their first tokens, made basically 200x, which is quite big amount of money. But if we want to explain and get this topic a little further, we can also notice that these people needed to freeze their capital basically for a couple years. Usually the tickets in investment like this are really high because if you have a brands like Atari that onboard into your projects, you all usually want to get more money from investors if you have um, a level of trust like this from a brand like this. So usually an individual investor is not able to have that much money for a even minimal ticket that these companies require, but also this person don't want to freeze money for this long. Usually, if you sign contract like this, these companies don't even know when the ICO is going to happen, so they basically give them money blind. Mm, from our perspective, where the treasury frees money for investment like this, you as a token holder in dividend have no effect on yourself because still as a DV holder, you can just sell your investment, but still you can take advantage of investments like this made by the treasury. So at the end, we freeze the capital instead of you. Dividend all-in-one solution. So basically, here's a breakdown of a couple projects or ways of investing that are similar to Dividend, but still are slightly different in the most important ways, because we've created an ecosystem that overall is sustainable and it it's all in one place and in one solution. I think the best way to explain is that we as a team wanted to get things that we've seen as interesting or a good ways to somehow award our holders from projects like this, but we also wanted to avoid problems that I personally and we as a team have seen in a certain different projects around crypto. So we can begin here from Commonwealth, which is a quite big brand these days, made by post Wall Street workers. So when it comes to Commonwealth, you're able to stake it from the project's revenue. So the passive income is quite okay. is quite interesting here, and the revenue basically sets the price of the token. Unfortunately, this token is not burned and bought back, so there is no buying pressure made by the team itself. Early investing phase, the core of Commonwealth is to create a basket of tokens that people invest in and just take advantage of it. But by, for example, if a certain project is unlocked, token is unlocked, it is constantly sold, and the money is just distributed to the holders of this particular basket. Diversification is also a part of Commonwealth, but in here you can't manage the portfolio actively. So when the basket is created once, you can't make any changes. From my point of view, it's quite tough because crypto market is that dynamic. So it's crucial to be able to manage your portfolio depending on the market condition. The next way is Uniswap v3. So basically, it's using v3 liquidities by yourself, which is not easy. You can read about this on my LinkedIn profile as a let's say like a document. So here we can see that you get the passive income. That's true, but you don't have any buybacks and burns, so there is no buying pressure on your position. Also, you are not able to do any early investing phase stuff or diversification because we are still considering a person who don't have that much money. So when you want to start investing in a Uniswap liquidities, you still need to keep in mind that expenses or gas fees usually are going to just eat your profit all. And also there is no active portfolio management because when it comes to liquidities like this, the more you move it, the less money you make. That's the overall rule, which is not base. I mean, if you are an experienced person and know what to do, you are also able to do right decision regarding investing like this. Another one is Sphere Finance. So when it comes to Sphere, they wanted to create an ecosystem of sub projects out of which revenue uh, was used to buy back their own token and burn it. So here there is no passive income, which is, I think, one of the biggest problems these days when it comes to crucial assets like Bitcoin or gold, because to get any money out of it, to get the revenue, you need to just sell this coin. It's the same with Sphere. You don't have any way to just hold it and make money. Another early phase investing, they don't provide things like this because they just build sub protocols under their own brand. Diversification, which is true because they just break down their investments into various sectors of DeFi, from lending to their own native swap. But still, there is no active portfolio management because there is no portfolio at all here. And at the end, we've got Dayvidende. In Dayvidende, we provide people with passive income in BNB, daily buybacks and burns, early phase investing for certain projects, uh, big diversification that you can notice later, and also active portfolio management made by a team of experts. 30% APR in BNB. So first of all, why is it BNB? Usually projects like us, projects like this, give people any APR in their own native token, which from my opinion, my perspective, is a big vulnerability because this simply makes a selling pressure on their own token, which leads to hyperinflation. We wanted to change it, so we decided to give people a coin that provides any value, but also gives the ability to somehow, even though you have a small amount of money, you can just have it through bear market and do the dollar cost averaging on BNB coin. Why is it BNB? Because it's a native token of one of the main blockchains. Moreover, it's a native token on one of the biggest crypto exchanges. And when it comes to BNB nature these days, it's totally um, it's totally deflationary because now all of the tokens are in circulations. Moreover, a part of them is burned because Binance, as an exchange, use part of their revenue to do a quarterly buybacks and burns. Their target is to shorten the circulation of BNB to half, so from 200 million tokens to 100 million tokens. So from our perspective point of view, it's one of the most one of the safest investments when it comes to big projects, blue chips. And this particular coin also gives people ability to simply stake it for either launch pools or launch pads provided by BNB. And these days, technology get that far that you don't need to have any account on Binance as an exchange. You can just simply stake it with DeFi. And even though they are decentralized, you can just take advantage of investing into launch pools and launch pads like this. The result that works. So getting back to BNB here, from the revenue that dividends make in the long term, we want to put some of this into BNB as our protocol's reserve, as a part of our expansion plan, which is gathering the governance coins of certain blue chip tokens, blue chip projects. And the point is to have the ability and advantage to be able to have some impact on the projects, because the more governance tokens you have, or the more liquidity of certain project you have as an owner, the more power over these projects you have. Because when it comes to decision making, it's a good idea. When it comes to just having a liquidity for other people to use for your certain project, we will have the power over their own liquidity. So getting back to BNB here, the revenue that is going to be stored in our vault is simply going to be staked in a Binance Launch Pool or Launchpads, like I said in a previous slide. And we have a cap percentage of which we want to achieve in a simply BNB holdings in a way like this. Increasing revenue, decreasing supply. So one of our mechanisms in our ecosystem, even one of our crucial mechanism, is daily buyback and burns made out of protocols revenue. To break it down, out of APR we make from V3 liquidities, 30% APR is given to people in form of BNB, which is quite easy, but the surplus of this money is then split in half. So half of it is just reinvested into the treasury, but the other half is used for daily buybacks and burns. So we calculate this daily, then make a buyback now from our liquidity pool, and we send these tokens to burning address that no one has access to. That's the solution for now. During the sale of Dayvidende, we also want to introduce an order book for DVE in a pair of USDT. So have opted how they want to either buy the DVE for cheaper or just sell it if they need to. Currently, you've got only LP that is connected to BNB, but then we'll introduce the second way as well. So when we do it, the buyback will be split. So after this money, half is going to be bought back from liquidity pool, and the other half is going to be bought back from order book to USDT. When it comes to fees from both of these solutions, in LP, DVE is going to be burned as well, but the BNB from revenue is going to be just set to the launch pools and stakings like we do with the vault. When it comes to order book, the situation is quite similar. So the DV is going to be burned simply, but the USDT is going to be changed to BNB and also get back to launch pools and staking, as we've broke it down in a previous slide. Leverage your income by arbitrage. So the nature of dividends ecosystem gives people some abilities to take advantage of our buybacks and burns. How it works? Simply saying, if we use part of our revenue to buy back DVE from our pair and burn it, it's obvious that the price of DVE to BNB in this launch pool is in this liquidity pool is going to go up because of our price actions. So this gives people advantage to, for example, if you have some DV on your wallet, you can just sell them with profit from liquidity pool and then bought them back from our website for $1 until we run out of coins. I think that's quite easy. Moreover, the second option is a difference between DVE liquidity and order book to USDT. Because if the liquidity pool in the DVE in liquidity pool is first priced in BNB and then by the amount of BNB it's priced in USDT, the volatility of Binance, no matter of DVE price, drives the price of DVE up or down. So that gives people also an ability to just coins on liquidity pool and buy them back from order book. David 2.0. So our goal is to distribute 10 million tokens, $1 each. After that, we want to recreate the whole dividends ecosystem, need to focus more on growth of the treasury than giving people the fixed amount of BNB, which means that from this moment, you are not going to get 30% APR fixed anymore, but the amount of BNB you get will be dependent on the protocol's revenue. For example, out of money made by a certain elements of Dayvidende 2.0, 10% is going to be given to the team as a team's and a company's revenue. 45% is going to be reinvested, and the other 45% is going to be somehow distributed to our hodlers. So from this 45%, it is given to holders. Half of this money is used to continuous buybacks and burns of our token, but the other 22.5% is simply sent to people as a form of BNB, as we do currently with the fixed APR. So besides that, the whole treasury is going to be is going to look slightly different, as you can see here. So the first part are going to be stable coins, which is just a reserve of money ready to be invested into occasions that are going to appear either on crypto market or outside of crypto market. In Dayvidende 2.0, it doesn't matter because we also want to expand and get over the blockchain to more diverse ways of investing. So like I said previously, we also want to have a reserve of Binance coins, which are going to still have 20% of our treasuries portfolio. 25% of the portfolio is going to be mining of crypto. Here we consider mostly Bitcoins as a native mining from native mining from right software, hardware as a of course mining rigs. To do it, we plan to introduce a separate company under Dayvidende brand, which is going to be one of the first companies under Dayvidende brand, out of which revenue is going to be paid to the main project. So when it comes to mining, we don't want to only mine crypto by ourselves, but also you want to provide people with ability for co-location of their own mining rigs if we are going to just, create a big company around this particular sector as well. So another part is staking and farming. Here we are talking mostly about the investments we do currently with liquidity pools, but also governance tokens and many more. The next part is physical goods, which is 10%. Here we're talking not only about real estate in Asia, especially when I was in a over almost 4 month business trip, but also physical goods like luxury watches, like physical gold, silver, things like this, that also have a speculative value, and in which sector I also have a quite high experience. And at the end, we've got long-term holdings. Here we are talking about blue chips mostly, like Bitcoin, Ethereum, so coins that are more like not a good speculative tool because they are too big to grow more from my perspective, but more like a safety element of the whole project that is going to, just hold the value and be the reserve depending on the market condition. Proof of treasure. So in Dayvidende 2.0, not only the treasury is going to be recreated, it's a good word, I think, but also the model of liquidity pool that we have currently. Now the liquidity is provided on PancakeSwap, which is a simple V3 liquidity, but we want to move this liquidity to our own in-house DEX with specifics like this, with dynamic fees. So let's think that the treasury is $1 million and the market cap of DVE tokens is the same. The buy or sell tax is going to be the same, and this tax is simply transferred to the treasury. But when the treasury's value fall, but the market cap of DVE tokens sticks the same, the liquidity pool is going to change the tax for doing swaps in order to make here a selling pressure. So the DVE market cap is going to follow the treasury's value here. No matter if people sell or buy token here, because even though someone buys DVE at this point, after some sales, the treasury will be the same level as the DVE market cap. And in the first situation, which is similar but different in a way of growth of the treasury, not fall of the price, the LP makes more like a buying pressure instead of selling. So the DVE market cap is going to get to fall to the same level as the treasury. So at the end of the presentation about dividend is, I think, the one of the most interesting parts about the protocol, which is our free-level affiliate program. I think personally that this, like as a marketing tool, solution like this is one of the best things you can consider, because here, no matter who you are, you can just become one of our marketers, or not advisors, ambassadors. Yeah, that's the word I was looking for. So just to simply explain this, imagine that's you. So for example, you tell about the project to another person. If that person makes a buy of 100 DVE, you get 10 DVE as the affiliator. If this person refers to person B about dividend and person B buys DVE by the amount of 100 DVE, person A gets 10 DVE as you did with the person A, but you get 5 DVE as well. So you got 5%. If person B refers projects to person C at the end, the person B gets 10 DVE as a affiliate revenue. Person A gets 5%, so 5 DVE out of 100, and at the end you even though you are at the beginning of this pyramid. I think it's a good word, even though it's not a pyramid scheme, of course. You've got 2.5 DVE here. So when it comes to business stuff, this seems to be a quite, for some people, a quite tough solution. But from our business perspective, these tokens are vested for 365 days. So for next year, these tokens, and these are vested for this time, and you can just get a portion of them every block. This particular solution helps us with problem of verification users because here to buy DVE you just need to connect your wallet and that's all. So it's quite easy to create some kind of malversation here, but this prevents us from this problem, but still creates a short-term inflation, which which can't even exceed 17.5% a year. And after this year, no more tokens are inflated by this solution like here. Okay, so here is a breakdown of 1 week of dividends performance. As you can see here, this is measured from 13th of previous month to 6th of October. Oh, I can see that there is a small mistake here, but it doesn't matter. So we can see here that for this week, the treasury grew by 7.85%, which is, I think, quite a good number after just 1 week. When it comes to yield, the total yield is $1,550. The previous week, we've able to achieve almost 600 of revenue out of our treasury, which gives you an average APR per token 100%. How is it calculated? If we have distribution that you can notice here of 33,035 DVE, from this amount, we deduct the amount of DVE that is currently burned, the amount of DVE that sticks in a liquidity pool. So the tokens that are not provided with the APR, so they are just out of the circulation. We can calculate that for the tokens in circulation, the average APR. Of course, we need to deduct from this amount the cost of sustaining each position, which is a little more complex. But after that, this amount is still a little smaller, maybe 95%. So still, I think it's quite a good number. So going to distribution that we begin a moment ago, the total distribution of DVE is 33,035 USD, and that week, we're able to achieve almost 1,300 DVE in sales, which gives us almost 4% growth in a distribution of DVE token. If you will simply calculate this for next 52 weeks, we can notice, and I mean, we can calculate the average yearly growth of the treasury at the number of almost 200%. Of course, this is not that realistic, but still, the more tokens we distribute, the more treasury grows, the more money we manage, and the more yield we make. I think that's quite easy. So then we can go to the right side again. Here you can see the burn mechanism that we have. So the total DVE burned is 1,030 DVE, still based on numbers from previous week. And in that week alone, we were able to burn almost 300 DVE, which is basically 3.35% of the circulating supply. If we would make this figure times the weeks we have in a year, it's almost 150% of the burning. We know it's unrealistic, because that's mathematics, but still it shows, I think, like a good figure about how profitable our solutions are these days. Getting back to the left side, we can see payouts in BNB. So total, we've paid out to our holders almost 1.3 BNB. But previous week alone, we were able to pay out 0.61563 BNB, which for this day price is almost $200. And again, getting back to the right side, we can see a DVE coverage. So here we break down the treasury value, which is for that moment, $33,243. We compare this to the circulation supply of DVE, which is 30,940 DVE. So now, if theoretically we want to close a project, each holder is going to get 1.13 bucks per DVE. Still, keeping in mind that you can buy the DVE for $1 constantly until we run out of DVEs here. 1.13% coverage is quite a good figure. Treasure. So here you can see the project's treasury in current form. We've made a couple changes here, and now I will explain you why. So I think you can begin from USDT WBNB here, which is just a USDT to BNB pair. In this particular example, previously the range of work of our liquidity were 10%. So to explain this, if you set a free liquidity, you set the range in which your liquidity provides the liquidity for swaps. If you cross this, your liquidity don't make money. So easiest way is just to automate it. But we as team notice that this small width of 5% each way was too small money. How to explain this? Each time we make a rebalance, which is a just automatization of this process. So whenever the price point moves outside your price range, the position is closed. Half of this tokens, because usually if you cross this from one or a different side, your position is either one or the second token in a 100% of the amount in a position. I know it's quite tough to explain. So anytime you want to make a rebalance, you need to swap half of this money to a second token again and create a new liquidity with the new width. So each time you want to make a rebalance, it costs around 0.5 to 1%, depending on a liquidity. When this range was too small, the rebalance was taken every 3-4 days for a month. So even though the APR here was really high, and was even higher because, as you can see, we switched this, the pair didn't make enough money. What I mean, the cost of rebalances, which I call cost of sustaining a position, was that high that even though the pair makes money and generates fees, as you can see here, it was not profitable. But for an experienced person, it's quite tough to notice because usually in solutions like this, it takes time to see mistakes you make. But here, based on my and team's experience of 2-3 years in especially VF liquidity, it's even it's just easier to see and find so we can just manage positions like this more efficiently. So now we can get to the fetch BNB, which is now ASI, I think. They connected with two more protocols. So here we've made a change of deducting the total liquidity, because as you can see here, we've got over 5K, which was okay money. We used to have here over 9K, but the problem was the whole liquidity for this particular pair was 120K USD. So each time the rebalance was made, even though it was once, 2 or 3 times a month, not that often, it was too costly. What I mean, each time we made a rebalance, the slippage of this rebalance was so high that each time we lost 5% of the whole position's value to just sustain the position. That's why we decided to deduct this by half, and now the loss of the money dropped to a little less than 1% here every swap. The same situation as with USDT to WBNB. Usually inexperienced person see figures like this, see profits like this, but don't notice that the problem of the rebalances. Even though the position seems okay, even though both Fetch and WBNB are in profitless tokens, you lose money instead of making it. That's not the idea. So after that, we decided to put this money in some place. So we moved it from Fetch to Aster. Most of you probably know the Aster as a token, which is a native token of one of the biggest, I think currently the biggest rival to Hyperliquid. Hyperliquid is a exchange to trade with leverage, no matter the blockchain you use. Aster is their biggest rival. That is also promoted by CZ, also promoted by Binance itself. Basically, it was a token. It was an exchange that was rebranded from Apollo X that I used to invest a couple of years ago. Why you decide to do it? Because it's quite a fresh token. Only 20% of this token are unlocked currently. So it seems like a tough investment for most of the people. But based on our analysis, where I checked the upcoming unlocks, and noticed that currently the the liquidity uh, is quite stable, and the price, we decided to put this money here, mostly because of the APR here. Now we are, sorry, now we know that the token is going to fall in a price, because in next year, the amount of tokens in circulation is going to double. So the price is expected to fall by 50%. But still, if the APR is going to stick at a similar level, and also if we consider that the bull run is going to take a couple more months, within I think couple of more months or weeks, the price of Aster is going to be either stable or even grow in price. Okay, so here we have some news or things from the ecosystem. Also problems we notice. I have a contact with a couple of you, so I think it's a good way for us as a team to see a perspective of a person who invests into Dayvidende. We can hear problems you notice us. We also see the challenges that people meet when they want to either get DVE token or do some other things around our ecosystem. So the first problem that some of you notice is a problem that even though some people pass KYC, the website don't give them ability to buy more tokens. This particular problem is currently under development. Our team is just checking it to solve it. So as far as it's done, we will also provide information about this for everyone. So we think that it's important to have a talk with our community and solve these problems as fast as possible, even though some of them take time. Another Oh, here's also a small problem with the text, but that's okay. So the reason of the recent project's problems, irregular zooms and burning. So the problem was that I was getting back from Asia after a form of business trip. Also, when I get back to Poland on last Thursday, I've met some family problems. So I personally had to just deal with it, have some time and think about this. But as you can see from the Monday, everything got back to normal. So we run Zooms as we did previously, and everything is going to be consistent now. Card payments for DVE until the end of October. Um, Again, thing related with my business trip. I met a person who's a card provider. From our perspective as a company, it's quite tough to get a thing like this because from one hand, we still have some kind of ICO. On the other hand, because our team is decentralized, as we want to stick decentralized and anonymous as much as we can, we don't want to be uh, how to call this. We don't want to be mm, checked as a company in Europe because you probably know how tough is it in Europe when it comes to law and regulations, and that's why we decided to seek for different providers. So I was that fortunate to find the right person in Thailand. Uh, I still have a contact with this guy. He said that the solution about their card processing is going to be ready within next 2 weeks. I give them another week for implementation with it with us. So I hope at the beginning of the October, everything is going to be fine, and the card payment is going to be implemented, because now many of you also tell us that the way of buying our token is quite long, especially for newbies in crypto. So implementing a solution like this makes this a way shorter than it is currently. So it also opens a market of dividend for more potential buyers. So yeah, I think that's a really good solution. So another we can see is a plan for treasury growth and crossing 40K DVE. So first, why this milestone? Like I said with Fetch, we've got some maybe not restrictions, but limitations with amount of liquidity that we can provide. So here we've got two potential solutions. First one is moving our treasury to another blockchain. I was thinking about Base as and also an Airdrop, which is currently the biggest decentralized exchange on Base. Or the second option is to create a second vault as we have on BNB now, which everyone can just jump in and see what we invest in now, and just put money into the fresh one. Why is that? Like I said with Fetch, which is still a good example to explain, we even though we had 9K in liquidity, we were losing money because of the rebalances. So we deducted this by half. Now the position is 5K or 4.5, I'm not sure now. So we can't add more money into this particular liquidity because the situation is going to be the same. So the cost of sustaining position. It's time for bed. Oh, sorry again, Alexa. Um, what I said. Yeah. So the solution is to create a fresh position with the same amount of liquidity, and here I think that's the way here. So we can create another vote and then another and then another vote, and uh, at some moment we are going to have a we're going to have separate liquidities that sum up in a one big, and each time one of these liquidities is going to be rebalanced, it uses liquidity of a of the rest of positions we have. So instead of let's consider it having 1K in one big position, we split this into 20 separate positions, 5K each, and each with different width. So we want to create a self-sustainable market making, modern market making, how I call this. And in this scenario, each time one rebalance is made by one position, it don't affect any others. So it uses the liquidity out of the rest of the positions. And at the last element is first share of Dayvidende, third-party project. I, as a person, with my experience with the people I met during my journey in crypto, I know people that want to create the projects, but they don't know how to do it. Or I know in this particular example, a set of developers of big company with big experience making products for brands like Coca-Cola, for example, and wanted to um, they asked me for help to get more realizations, get more projects to just create. It's a software house, but I know how good technology they have, so I said them clearly, guys, you've got awesome technology, so why do you just can't pack it in a way of a crypto projects that you can just monetize, right? So I don't want to grow this as my personal brand, but to get to this project with Dayvidende a set of experts. And it's also when it comes to revenue or a share in this project's tokens. I can't say more about this one, but I hope when this project starts in 2, 3 or 4 next months, you're going to hear about this, and you're also going to hear about Dayvidende that is a part of this project as an advisor team. So probably this is going to be a first project of which Dayvidende is going to have a share in the revenue. And because we as Dayvidende are going to create a revenue for them, revenue model, we can just create this the way we want and the way the tokens are going to be really useful. So yeah, overall, I think it's a really good future for Dayvidende here. Okay, I guess no further questions. So just to tell the people that take part in this call, even if you watch it in YouTube, it's the same to you. I know that Dayvidende as a whole ecosystem is quite complex. We know people require from us that we're going to do a videos explaining. Everything is on the way here. And if you need any help, want to ask more questions, you can either go to our Telegram group or just hit me up privately. Usually I have time. Usually I always have time for DV holders. So any questions you have, just hit me up. I know people are worried about asking on a forum. Usually they want to ask privately, but from my point of view, there is no taboo in crypto market. I know how I begin my journey with either investing on my own or how tough it was to get a good information and just to educate yourself. Now it's a way easier, but still there is so many niches and options to make money that yeah, overall having a good quality of education is quite tough. So still, if you're a holder, if you want to ask questions even beside the dividend or about crypto overall, yeah, I'm always open uh for talk. Yeah, so like I can see here that Przemek started the airdrop. So now it's my turn to unlock the airdrop. I need one moment to open it. Okay, so now the airdrop is token. And very simple, I can also explain it here. I give you, let's say, 1, 2, 3 minutes, we will see. When it comes to airdrop, everyone who takes part here is awarded with BNB tokens. Oh shit, BNB token, DE tokens, of course. These tokens are not just simply taken. We buy them from our liquidity pair because in our um, in our yeah, basically we don't want to print tokens. Our goal is to have every token covered by BNB or USDT in the treasury, so we don't use these tokens freely. When it comes to how to say that, yeah, I think when it comes to the airdrop um, and fairness of the airdrop, after the airdrop, I usually close it, immediately take this data and by random choose one person that gets 10 DVE and the rest just gets 1 DVE. I think it's a good deal. Okay, so let's take a look if everything is clear here. Okay, I see the answers, so now we can close. When we close it, where we close it. Okay, one more moment. I need to find a place where to close it. Usually, yeah, like usually it's quite tough to find the right place here to do so. No, okay, that's why, because I have like this. Okay, so we close the form. And yeah, so I think we're done. Thank you very much for attending our weekly AMA. As you can see, the project is getting really well, and the figures are okay. Um, So thank you very much. If you have any further questions, I also stay as a last person on this call if someone wants to talk private here. But like I said, you can also go to Telegram. It's up to you. So yeah, thank you very much. Well, we are done and see you next week.